Do you even need a financial advisor to become financially successful? Great question. I'm going to dig into this question in depth in this episode of the Money Master Unleashed podcast. In today's episode, I'm going to cover what an advisor does, how we can help you, and why you may or may not need a financial advisor to work with you. You see, if you have a simple financial life, you may not need an advisor. But once things get complicated and financial decisions become big, you may find yourself needing some help. So if you're a do-it-yourself listener, awesome. You're going to find great value in today's episode. And if not, I'd encourage you to find a financial planner who does some of these things that I talk about today, and I think they may benefit you quite a bit in your journey to financial freedom. I'm Adam Olson, and I've been a financial planner with Mutual of Omaha for over a decade. And what I've discovered in my 10 years is that I work with people day in and day out who don't have the time, the desire, or the expertise to make the best financial decisions for that in their life. And here's some things that you need to look for in an advisor that I'm going to walk you through in this episode. And you should also be considering looking for a certified financial planner. That's somebody who's done proper education and got the certification in order that they have the base knowledge of how to best educate you on all things personal finance. Here's a great example for you. See, I'm not a big fixer of things around the house. I don't really like to install appliances. I don't really like to install fans. One, because I don't have the time, I don't have the expertise, and I don't have the tools. So long story short, a couple weeks ago here, I got a fan to put up outside of our house. And my wife thought it'd be a good idea for me to try to do it instead of to hire an electrician. So one Sunday, I pop open the box to put the fan up. Well, I see one, that there's no wires installed in the roof to put the fan in. And number two, that I don't have the proper tools to do it. So I hop online and I see all the tools that I'm going to need to install this thing. And I find out that the tools were going to cost me around $600 to install the fan. On top of that, I have no idea how to do any of the wiring whatsoever with the fan. And so it probably would have taken me 3, 4, 5 hours to figure out how to do this thing. Instead, what I did is I called up an electrician. I get the bill a month later, and the bill was only $200 to install the fan. So all in all, that decision to hire out the fixing of my fan saved me half a day worth of work and cut the cost in half because I didn't have the proper tools or expertise to do this. So let's pair this over to an advisor. What does a financial advisor do, and why do you need to consider one? Well, there's a great visual that'll pop up right now for you guys if you're on YouTube. If not, I'll explain it to you in a little bit of depth here. So on one side, I have you as the client. On the other side is your financial advisor. And in the big middle is a big wall that we're talking about. And that big wall is going to keep you from making stupid decisions. So your advisor stands between you and a bad decision. One, because we've made a lot of bad decisions ourselves with money. And two, because we've seen a lot of clients make a lot of bad decisions with money. So an advisor helps you take emotions out of your financial decisions. You see, a lot of the decisions that you have to make with money, day in and day out, have emotions tied to them. And you may find yourself making bad decisions if you let emotions creep in with your money. So advisors can also help you implementing asset allocation, so how we invest your money in different sectors and different things, and also a thing called asset location. You see, I find that a lot of clients that have done it themselves over the years have all of their money in their 401k accounts, which is awesome. So they have this massive 401k account, but it's all pre-tax money, which is all taxable to you when it comes out. So if I could have caught that client 15, 20, 30 years ago, I could have taught them about tax-free accounts, such as Roth IRAs, such as index universal life strategies. And then qualified accounts are a great tool to be using for tax-free money, but then I also could have taught them about taxable accounts and how we can have qualified dividends in taxable accounts that are taxed at a lower rate. You see, saving and investing is the first step to get to. You get to 20 to 25%, that's awesome. But you need to be thinking about asset location. Where am I investing these dollars so that I can access them in a tax-efficient manner down the road? Some other things that advisors should be able to help you with is when and where to borrow money. Here's a couple things for you to think about. Cars. This is a great example for you. So a common conception among financial advisors is that you should always put 20% down when buying a car, never have your loan last longer than 3 years, and never have the payment amount be greater than 8% of your income. But I'm going to take it a step further. High income earners. If you guys are making over $250,000 as a household and you've been doing that for several years, you should not have a car loan at all. So if you're a high income earner, ditch the car payments. You guys don't need it. Pay cash for your cars. You'll thank me later. Also, you should never borrow money for speculative investments. So a financial advisor is really there to help you with the financial decisions. Anything with a dollar sign in your life, you should be talking to a financial advisor too. You shouldn't borrow for speculative investments. Financial advisors should help you with investments that you're making outside as well. So they should have some type of filter and some type of process that they help you monitor what type of investments you should be doing, whether it's a vacation property or an Airbnb or a short-term rental or another business opportunity. You have to take into account time, taxes, risk, returns, and of course fees. A great financial advisor will help you with all of those things in your life. Now, there was a recent Dalbar study that was done in 2024 here. These studies come out every year. And there were some key findings that I want to hit at that I think really also enhance why you should be looking at a financial advisor to help you out with your planning. So here was the first finding. Number one, the average equity fund investor underperformed the market. The average equity investor earned 5.5% less than the S&P 500 did in 2023. This was the third largest investor gap in over 10 years. So let's think about this here. So an average do-it-yourself equity investor, they made 5.5% less than the simple index did in 2023. That's a lot of money. Compound that year over year, that could be hundreds of thousands of dollars for you. And so why, again, should you be working with an advisor? Because a financial advisor who's good at their job, who helps you, keeps your emotions out of the decision maker filter. So an advisor will help you make great decisions with your money. Another thing, the average fixed income investor underperformed, but to a lesser degree. So the average fixed income investor only earned 2.63 less than the Bloomberg Barclays average bond index, but still less. The average investor that did it themselves underperformed the stock market by 5.5 and the bond market by 2.6. Not great. And lastly, emotional decisions can really hurt your returns. Investors tend to sell out of investments during downturns and miss out on rebounds. This report, the Dalbar report, illustrates the importance of a long-term investment strategy. So here, as another example for you. When you're doing things yourself, your emotions are attacked to those decisions, and you get extremely fearful of losing. But what does that fear cause you to do? Miss out on the rebound of the market. So that's some other great things on why you should work with an advisor. But anything in life that has value in it, you're going to have to pay for. So what do advisors charge? Well, most advisors charge a 1% asset under management fee. So on the money that you have invested with them, the average financial planner is just going to charge you a 1% annual fee on your money. So if you have $1 million invested with them, chances are it's probably going to be around 10 grand a year to work with the advisor. If you have 100,000, it'd be around $1,000 a year to work with the advisor. Or some advisors will charge a monthly fee, say $100, $200, $500 a month to work with them. Or maybe it's a combination of the two. Now, you need to decide, is it worth it? Well, you just saw in the previous examples that I gave that the average investor underperformed by over 5% stocks and over 2% bonds. If an advisor helped you keep from making those emotional decisions of selling, I would say they would have been worth it in that example. In addition to that, I'm going to leave you with this on today's episode. A Vanguard study that was done here in 2024 recently found that a 3% increase is found in a financial advisor inside of your returns. So yes, an advisor charges a fee. Advisors have families, they have businesses to run, they provide a value to you. An incredibly valuable thing that a financial advisor does could potentially increase 3% returns on your portfolio. How do they do it? Why? By helping you with your behavior coaching, asset location, and helping you with your withdrawals. So let's dig through this Vanguard study a little bit more. On the screen on YouTube, you're going to see the value a financial advisor will add. And if you're on audio only, let me walk this through you. So, an advisor that helps you with cost-effective implementation expense ratios. Essentially what this is they help you invest your dollars into low-cost investments. That is worth 30 basis points, 0.3%. Rebalancing, selling off certain assets and rebuying other assets at certain strategic times during the year. Buying low, selling high, doing the rebalancing is worth 14 basis points. Behavior coaching. Essentially what this is, guys, is this is an advisor stepping in to help you from making stupid decisions with your money. That's worth 2% a year. Asset location. Are we using the tax-free accounts? Are we using the taxable accounts in addition to the pre-tax accounts? And what type of tax strategy are you using year in and year out with those? That's what asset location is. That's worth 60 basis points. And again, this is a huge one. I talk about this all the time. Withdrawing assets is huge. You should have a strategic asset distribution plan. That is worth 120 basis points, 1.2%. Now, that range of potential value add for financial advisors, according to the Vanguard study, is up to 3% or even exceeding 3% if the financial advisor is effective at their job. So here's what I would suggest you do if you've listened to this episode today and you're like, you know what? I should find a financial advisor. Well, know that a financial advisor is going to charge for their time and their expertise and for their money management. But they're going to help you with making bad decisions with your money. They're going to help you with behavior coaching. They're going to help you with asset location. They're going to help you with investment filter decisions, what you should invest in, how you should invest. They're going to help you with strategic tax planning and distribution planning. So if you find that you need help with all of those things because you have, say, $500,000 or $1 million and things are getting complicated, I would encourage you to reach out to a couple different advisors. I would stress that you find CFPs who are certified financial planners, which means they've got the proper education so they have a broad knowledge of finance. And if you need help, I'd encourage you to reach out to me. I'd love to personally connect with you or put you in touch with one of our Mutual of Omaha advisors around the country. We have a team of advisors around us who help us make excellent decisions day in and day out with our clients for their money. And if you want to talk, I'd encourage you to book a link. Go to adamolson.biz and you can schedule a time with me there. I hope you've really enjoyed this episode today. And if you found value in it, like and subscribe. And don't forget to leave a comment. Thanks for listening to the Money Mastery Unleashed podcast. Stay tuned for more in the future. This podcast is for educational purposes only and may include references to concepts that have legal and or tax implications. It's not to be construed as legal or tax advice. Such information or opinions is subject to change without notice and is not intended to use as an offer or solicitation with respect to the purchase or sale of any security, insurance products, or offer of individual investment advice. Any strategies discussed may not be suitable for everyone. Mutual of Omaha Investor Services, Inc. does not provide legal or tax advice. Please consult with your appropriate professional regarding your personal situation prior to making any financial decisions. Securities and advisory services offered through Mutual of Omaha Investor Services, Inc., member FINRA SIPC. Riser Insurance is not affiliated with Mutual of Omaha Investor Services. Investing involves risk, including the possible loss of principal. Past performance does not guarantee future results. Diversification does not guarantee a profit or protection lost against loss in a declining market. Purchase of life insurance is subject to meeting underwriting requirements. There is no guarantee of an individual will be insured. Annuities are long-term investments designed for retirement purposes. Withdrawals of taxable amounts are subject to income tax, and if taken prior to 59.5, a 10% federal penalty tax may apply. Guarantees are backed by the claims paying ability of the issuer and are subject to their terms and conditions.